sales growing.
Fair.
All right, Rowan, do you want to kick us off here?
All right, awesome. Well, welcome everyone. Thank you so much for joining us. My name is Rowan Swain. I work here at the Ecology Action Center as part of our membership team, and we're really happy to be co-hosting this webinar today on green investing along with two of our sustainability allies, Assante Wealth Management and CoPower. So I'll introduce our guests in a second, but first a quick note on format. So the majority of the webinar is going to be a conversation with the panel, but to everyone tuning in, you can ask questions in the chat panel at the side. And please do, because in the second section of the webinar, we'll pose those questions to the panel. So feel free to ask them as they come to you, and we'll get to them in the second part. So we're really lucky to be joined today by three experts that are going to help us learn a little bit more about where to begin when it comes to green investing. So without further ado, I'd like to welcome Greg Overmans, Director of Digital and Customer Experience at CoPower, Tim Nash, Founder and CEO of Good Investing and author of the popular blog, The Sustainable Economist, and Richard Nickerson, Senior Financial Planning Advisor at Assante Wealth Management. So welcome, guys. Thank you so much for being here.
Thank you.
Thanks, Rowan. Let's get this going.
All right. So first question is to all of you, and maybe in terms of order, we can go Greg, then Tim, then Richard. So first off, I'd just like you each to tell us a bit about what you do and why doing it right now is so important.
Yeah, so to start, I'm not Jen, who was initially advertised as being part of the panel. Jen, unfortunately, couldn't make it today, so I'm subbing in. She's part of the CoPower team with myself. And so for the quick overview, here at CoPower, I lead marketing, lead digital technology, and I'm on the capital team. So ever since I started here just over 2 years ago, not only have I gone knee deep in green bonds in the world of CoPower, but I've turned my entire personal investment portfolio into a green machine. So thanks to people like Tim and others in the industry. So happy to share my personal journey as well as from the CoPower perspective. But the quick reason why I think this is so important is that we need as much money and capital moving into solutions to climate change, which I think is the biggest problem our world is facing. And investing is one of the greatest ways to do that.
So my business model is a little bit different. I'm what's known as a fee-for-service financial planner. So not so much an advisor or broker, more like a coach. And so I help people figure out how to invest their own money online according to their values. And really, it's been exciting. I'm sort of at the intersection of these two trends. The first one is this shift away from mutual funds towards ETFs. And there are a number of reasons why people would want to do that, but probably the biggest one is management fees and sort of keeping more of that money in your pocket. And then obviously doing it in line with your values. So if you are going to learn how to do it yourself, then you can make very deliberate decisions about what types of companies you want to invest in. And I guess sort of why I'm doing it is that, you know, I've always been sort of frustrated by a lot of these account minimums within the industry that oftentimes, you know, I'll speak from my experience that, you know, people wouldn't talk to me unless they had 100K or 500K or $1 million. And I understand why it's sort of the regulatory burden and doesn't really make sense there. But what it's meant is that for people who are just getting started or people who've got smaller amounts, oftentimes they felt really limited and would just sort of walk into the bank and get sold products without knowing what was really in there. So I'm sort of on a mission to help kind of regular Canadians, people with RSPs and TFSAs and RESPs to really make an intentional decision about where they invest their money.
So Richard Nickerson, I'm a financial advisor. I work in Halifax, Nova Scotia, but I have clients in St. John's, Newfoundland, and BC. So I work just down the road from Rowan, the Ecology Action Center in the Hydrostone area, in Assante Hydrostone. And I've been helping clients kind of align their portfolios with their values probably for 25 years now, back when they used to call it ethical investing. And then a few years back, I think they called it socially responsible investing.
Yes.
And now it's responsible investing. And I think in another 5 or 10 years, it might just be called investing. So they're going to incorporate this ESG in kind of the investment matrix kind of in general. So I just found that 25 years ago, I had a client from the United States came to me and asked me if I can help him create a portfolio that would include his concerns regarding the environment. So basically that's where I started, and I started doing research. So I've been doing this for about 25 years.
Great. We're seeing questions along the side here. We've got one. What is it? What is an ETF? Why are you using acronyms?
Oh, ETFs, exchange traded funds. So yeah, basically very similar to a mutual fund. It's like a sort of a basket or a bundle of different companies. But instead of a mutual fund that traditionally gets sold through a salesperson, through like a dealer or sort of like an advisor, exchange traded funds are bought and sold directly on the exchange. So you can buy them right over the stock market, just like you would a normal stock, which is why they're very popular among people who are doing online investing. And the other piece that I really love about exchange traded funds, ETFs, is that they're very transparent. That with 2 clicks, I can get the full list of companies. Whereas with mutual funds, I don't know if anyone's ever tried to get the full list of holdings, but it's very challenging. They'll typically give you the top 10. And if I want the full list, I'm sorting through these like 500-page PDF legal documents. So, you know, with ETFs, they're more transparent. They're much cheaper, much lower management fees than mutual funds. And so, and they're just becoming increasingly popular. That over the last 5-10 years, we've seen this huge shift in the retail market, you know, away from mutual funds towards ETFs. There's still a long way to go. I think they only represent about 11% of overall assets in Canada. But last year was the first year that there was more money going into ETFs than there was in mutual funds. So it's a bit of a, I would say there's a shift happening there, and I'm happy to see that.
And I would say traditionally exchange traded funds would be like index linked. Now we're starting to see more actively managed exchange traded funds too. So they're almost more fund-like, where they may have an active manager behind them. So you get a kind of,
right.
It's just like wading through, you know, another pool of assets.
Totally.
Awesome. So my next question is actually for you, Tim. Speaking of terms, SRI, ESG, and impact investing. So
Yeah.
What are the terms and what do they mean for me?
Oh, the acronyms. Okay, here we go. So SRI, socially responsible investing. And, you know, I would say that this was the term, you know, I think ethical investing was the first one in Canada. It was largely for religious reasons that would often get rid of a lot of things, these sin sectors, sin stocks, things like alcohol and tobacco and gambling. And so socially responsible investing has now evolved. And although it still has those exclusions where certain things will be excluded from the portfolio, now we're moving towards this idea of ESG integration. And that stands for environmental, social, and governance. So basically, just like analysts for a very long time have been looking at stocks' performance and financials and cash flow and all these different metrics, now in addition to those financial metrics, they're also looking at environmental, social, and governance, and usually it's through the lens of risk. So looking at, you know, do they have the policies and procedures in place to minimize a lot of these ESG risks? From there, and this I would say is probably where the industry is going to continue to go towards this ESG lens, just because what we found is that oftentimes companies that have a better ESG score are actually performing a little bit better on a risk-adjusted basis. So I think the industry, to your point, that is now recognizing that, oh, there's money to be made here, that of course we're not going to ignore these environmental, social governance issues. Instead, we're going to bring them into the investment process to find the best companies. Now, you know, those strategies, the negative screening and the sort of ESG integration, those are strategies that I refer to as sort of doing less evil. That really what we're doing is we're getting exposure to these large, you know, multi-billion-dollar global companies. We're just kind of getting rid of the nastiest ones. With impact investing, what we're doing now is focusing on doing more good. And that typically for me, I wouldn't view this in terms of stocks, that looking at green stocks, there is a strategy there. That's what I would call thematic investing, where we're investing in these green themes. When it comes to impact investing, I usually view it as these direct investments in organizations, companies, nonprofits, where we're actually, you know, really having that direct positive impact. So this is going to be things like community bonds and green bonds and microfinance, where we're loaning money to entrepreneurs and co-ops in emerging markets. And there's sort of this wide range of options now with impact investing. And that what I would argue is that in terms of a client's portfolio, if we think of your investments kind of like a pie chart, that, we wouldn't want to put all of our money into these impact investments. That what we would want to do is have a mix of things and be very deliberate about carving out part of our portfolio for these impact investments, and have that as kind of part of a broader investment plan.
Can I jump in with an example? Like the importance of ESG, and you take a look at an example in 2010, when British Petroleum in the oil spill, I think 130 million gallons got dumped into the Gulf of Mexico. So 10 years later, I think the total bill for BP, I was reading an article in Bloomberg, I think it was $70 billion was the liability. And so you think, like, how does that play with a stock that's inside your portfolio, and how would you have known? Well, you looked at 3 years earlier, and I think there were like 700 red flag safety and environmental red flags for BP. And the next closest oil firm, I think, had under 10, right? So if you're just looking at the financials and not paying attention to these ESG issues, you're going to miss that. And the stock went down over 43%. And we're seeing that more and more. You look at the corporate governance with SNC-Lavalin, and that was down over 60 some odd percent. But if you go back in time, you look at Exxon Valdez, I think that was in 1989, if I'm correct, that when that incident happened, the stock was only down 4%. So, as we're getting further down the line, it's becoming more and more important. So brand is more important. It's just not the balance sheet now. We're looking at the brand and how things can have a significant impact.
Right.
Awesome. And I've noticed in the questions here, a few people are having trouble with the screen. I'm not sure if there's anything we can do on our end, but to those of you that are having issues with the video, we are going to send out the recording of the webinar out to everyone that registered. So if you're having a little bit of trouble with the video, then
you can also just refresh the screen and come back in. Often kind of resets the video for those who still can't see us.
All right, perfect. So next one is for Greg. So Greg, CoPower's green bonds are classified as an impact investment. Could you talk a little bit about green bonds and what it means to be an impact investment?
Yeah, so as Tim mentioned, as an impact investment, we strive to make sure that there is a direct correlation between your investment and the impact that it has. And so CoPower offers a green bond, and that green bond essentially is a vehicle for us to allow individuals across the country to invest directly in solutions to climate change. And so what it means for CoPower is that we collect investments from Canadians across the country. We now have over 800 Canadians who invested in a CoPower green bond, and we pool that money and we make loans to energy efficiency retrofits, to solar projects, to geothermal installations across the country. And so the capital directly gets funneled into these projects. And these projects all carry a carbon emission reduction or a clean energy generation target, so that as an investor, you actually can see, yes, my $10,000 investment in a green bond actually offset this much carbon or generated this much clean energy. And so it's that direct link which makes it an impact investment, because you actually can follow along, just as you were, your stocks, you can follow along your energy reductions. And so CoPower actually is just back in the market with our most recent green bond. It's a 4% yield interest rate. That is a 5-year bond. And so that's kind of our newest way to allow Canadians with as little as $10,000 is our minimum to invest in kind of those direct solutions to climate change.
I'd say, Tim, there's a huge demand right now for that type of product, you say?
Yeah, I mean, definitely growing. I think that a lot of people are distrustful of the stock market right now, right? Understandably, it's very high, like it's been a good market. And so I think that there's always a desire to diversify, right? And look at sort of some different options there. And that as well, I think that with interest rates as low as they are, people are looking for ways to be able to sort of generate income. And then finally, I think that, there's this tension between sort of the doing less evil versus the doing more good. And I think that a lot of people don't just want to avoid the problems, are actually looking to contribute to these solutions and have that positive impact. So I'm absolutely seeing a lot of demand, a lot of interest for these types of products.
Yeah, and we saw a lot of the product on the institutional level. and now we're starting to filter down to the retail level for the retail investor. I can't wait to see the day when it's going to be really easy, for that to happen. And
getting there.
I appreciate what you guys are doing. So.
And now, Richard, as an advisor and a wealth manager firm, are you noticing that clients are asking more about green investments? Like, what kind of questions are you hearing, and how do you answer them when it comes?
I would say more recently, fossil fuel free divestment from fossil fuels has been a big discussion point. So, with Mark Carney, the former Bank of Canada head, coming out and saying that he believes that fossil fuel could be a stranded asset. So he's urging institutions to divest, which is kind of interesting. And then in Sweden, one of their pension plans, they divested from Alberta bonds because of their exposure to heavy oil. So you're starting to see headlines on this, and so this just isn't somebody that doesn't want to have fossil fuels in their portfolio. It's large institutions making these decisions.
For those people, what does it mean for oil companies to potentially have stranded assets, and why is that a big potential risk?
Well, it's just like musical chairs, right? At some point in time, we're seeing things accelerate. Like you look at, Tesla, Elon Musk, kind of how the transition from the internal combustion engine to electric cars. Although still a lot of that is burning coal, but so things are accelerating quickly. So an oil company may not be able to extract those assets and realize value for those assets. So at some point in time, they may have these huge reserves, which are reflected on their balance sheet, that they may not have value for those assets at some point in time.
Yeah, one example that came out, I think it was just within the last couple of weeks, but Suncor has this big mine, a big deposit. So these are going to be fossil fuel reserves that, originally their game plan was to extract that oil and then sell it on the market. But now, and it's largely due to economic measures, the price of oil has been down lately. But I think they wrote off like more than $2 billion in the value of that mine. So this is an example of a stranded asset where this was an asset that was on their balance sheet, that was counted as, monetary value. They're now realizing that, for economic reasons, they might not get to extract that. Mm-hmm. So they're now basically lowering the value, writing that off in order to, really sort of properly reflect the true value of that. And so obviously the fear is that Suncor tends to be a little bit ahead when it comes to a lot of these environmental, social governance issues. So the fear is that there are a lot of other oil companies that aren't going to write those off, that are going to keep those on the balance sheet as long as possible. And as we accelerate towards this low carbon economy, it might kind of happen all at once where those assets get devalued. And it would be, the analogy I use is sort of like the housing crisis we saw in the US, where the real estate market was valued very high, and then kind of all at once that bubble sort of popped, and people realized, oh, actually the value of that real estate is much lower than what had been reflected on the balance sheets, and obviously that caused an economic crisis. Yeah. So I think that's what Mark Carney is really sort of worried about. There was a paper that came out earlier this year called A Green Swan, and these central banks are really worried that if it kind of happens all at once, that instead of this slow, gradual transition, that if these assets, we just decide we're going to keep them underground and it kind of, they become stranded all at once, that could cause, a much bigger economic problem. And
there are more and more kind of products available now. Like 5 years ago, you have to be very, very creative to create a fossil fuel-free portfolio. So now, a number of investment firms, I know IA Clarington Enhanced Portfolio, they just right across their enhanced portfolios are fossil fuel free. I think any does in their environmental leaders is fossil fuel free. A few of the banks have fossil fuel free ETFs. So
that's right.
more products coming on board.
Absolutely.
And something that Greg, you had brought to our attention last night, Jim Cramer in his latest segment said that fossil fuel stocks are in a death knell phase. Would you guys agree with that?
Jim, that was amazing. For somebody who is so bolsterous, and especially someone who is so calculated around, the industries that they, he and analysts say are, good or bad, et cetera, to make that kind of statement, I thought was a huge, bold move.
Yeah, I mean, I think we have to, anything that Jim Cramer says, we have to take with a grain of salt, right? Like, it's like, let's not, base our retirement plan on what Jim Cramer is saying. However, when I started in this 10 years ago, and I can only imagine, 25 years ago, that really people thought I was nuts. People called me a tree hugger and, all kinds of sort of bad names and really just dismissed what I was saying. So, for me to turn on CNBC, the US investment channel, and to hear him say that. And then what's been interesting is I think him saying that comment has now sort of opened the door for some of the other analysts,
more mainstream,
right, to be able, to say that actually, we're at the start of this broad transition. And his argument, I think, is that really that oil stocks are now completely going out of favor. That the younger generation, that people just don't want to buy these stocks. So it doesn't so much have to do with, I think, sort of the economics that oil is going to disappear overnight or that these companies are going to go bankrupt right away. But I think what he's trying to say is that just like there is now a stigma around tobacco, where when we look at that just tobacco is just an absolute no-go for a lot of investors. That now we're seeing that same sort of stigma applied to owning oil and gas stocks.
Yeah, and I think 10 or 15 years ago, I thought there was an inflection point where things are starting to change over, and it's like, but now it really feels like things are becoming mainstream, and we're starting to see in the news a lot more. So.
Yeah, I'm calling it the Greta effect. Like, I really think that Greta, and it's hard because obviously she's just one person. It's part of a much broader, there's so many people, pushing for this and doing this. But, she's really, I think, caught the world's attention in a way that few people have around this climate change issue. And that, this is now a main talk, whereas at Davos or at any investment conference, whereas before this was always sort of an aside, a niche, only a small number of people are talking about it. It certainly has everyone's attention. So I would say that I don't agree with Jim Cramer that, the industry is in a death knell, that it's, that I would argue that for a lot of fossil fuels, that it is a sunset industry, that I don't see that this is where there's going to be a lot of growth. But that said, they do have really strong cash flows, right? So I do think they're going to continue to sort of pay these nice, healthy dividends, at least for a while. But that certainly, if you're trying to grow your money and invest in growth areas, obviously I think they're much better places for investors to put their money.
With less risk too, like you said.
Absolutely.
Awesome. So I feel like we've talked a lot about sort of the whys of green investing, but let's get a little bit more into the whats. So discussion for all of you again. So for someone who's new to this, what advice would you give for them to start this journey of aligning their portfolios with their values? What is a good first step that they can take today?
I'd say really exploring their, environmental, social, ethical concerns around money, write it out and what are your concerns. And I think there are a lot of great resources online. I think I'm a member of the Responsible Investment Association of Canada, and great resource. So just to kind of get an idea of, what is responsible investing and the different prongs, like what Tim went over about the negative and positive screening, shareholder engagement, local investment, and impact investment. So I would say, do a little bit of research on your own. And I think that RIA website is great. Some of the fund company websites are good too, like NEI has some good resources as well, and IA Clarington. And but yeah, just on your own, explore that a little bit, before you go to your advisor.
Yeah, I think for me, when I came to CoPower, I got to meet awesome people like Tim and the people at CoPower who bleed this type of stuff. And so for me, as a personal investor, the first thing I did was first I needed to learn what was I even getting into. So what currently is in my stocks and how bad is it? And so there are a lot of cool resources where you can put in, and all these resources, by the way, that we're talking about, we'll include in an email afterwards, links to some cool ways for you to learn. So don't worry about having to figure out what these URLs are, but there are cool ways to put in your mutual fund and see, what is actually in it and how bad are they operating. And so once I realized, I was investing in a whole bunch of crap, then I had to take the second step to figure out, well, how do I move from a whole bunch of crap to not so much crap? which, as Tim alluded to, of really trying to figure out who's got funds and who's got ETFs that are high rated for their ESG and who actually are holding good quality things. And to figure out the quality things, I look to a bunch of experts like Tim and his blog and various other people who've written blogs who are experts in the space who I can learn from. And again, we'll share some of those resources. But for me, I essentially went to the experts to say, hey, what are you investing in? What are the recommendations? And then I did my own research on those because I wanted to make sure I wasn't just blindly following a blog or someone's statement. And so those were the first kind of 2 key steps for me to open my eyes and then start to realize, okay, there are some products that I then took the next steps to, which I'll stop there.
Sure. So, and I deal with this a lot. Like a lot of people just, their eyes have been open to what's inside. It's very easy to get caught in this sort of default way of investing. Just kind of walk into the bank, get sold a product, have no idea what's inside of it. So if you're at the very start of your investment journey, and it is going to be a journey, start with a deep breath, okay? And know that, there are going to be some challenges here. Oftentimes dealing with our money is much more of an emotional thing as much as it is an intellectual thing. From there, I really love the point of sort of laying out what are your values. And the way I describe it is sort of what are your red flags? What are your thumbs down? The things that you're just like, no, not one penny into that. The common things are going to be things like tobacco, weapons, I think certainly fossil fuels. And then from there are going to be, everyone's going to have a different idea. A company that pops up a lot for my clients is Nestle or, Monsanto. Monsanto got bought by Bayer, but that's something a lot of people are just like a hard no on. So a little bit of personal thought about sort of, what are your red flags? From there, the next step is to start asking questions. And whoever your existing, money person, advisor, broker, whatever, start asking these tough questions. Now, as you ask these tough questions, be prepared for some pushback. Because I deal with a lot of clients who go in, who ask these tough questions and get completely dismissed and laughed at and get told blatant lies that you're going to have to sacrifice performance or that you're flushing your money down the toilet. Like, no, none of that is true. And if your advisor, if your money person is telling you those things and isn't willing to listen to you, isn't willing to work with you, that's a good clue that you need to switch.
That's where 90% of my RI clients came from, going to their advisor for 2-3 years in a row, asking questions and them dismissing.
And then, it really is, there's a huge knowledge gap in Canada within the financial industry where, a lot of people just don't understand it. They dismiss it and they often kind of deride their clients for wanting these things that beyond just like, no, I don't know about it. They'll actually like sort of, push back and make people feel quite horrible. So, if you decide you want to switch, that's when you need to really start to evaluate your options. Definitely the RIA website, the Responsible Investment Association, I think it's RIA Canada, I'm not sure if it's .com or .ca, but they've got a marketplace where you can find advisors in your area. If you do want, if you don't want to handle it yourself, if you want to let someone else handle it for you, find an advisor that is specialized, that has knowledge, and is obviously going to work with you to find these products. And then, my bias is to say that, consider the possibility of maybe doing it yourself. That I know it sounds really scary, especially if you're at the start of your journey, but it's actually really not that hard. When it comes to online investing, it's a lot easier than what people realize. And that there are people such as myself that are willing to help you in this sort of do-it-yourself journey. And that way you then have complete control and can be very deliberate about what you're investing in. So, to me, it really starts with, a little bit of research, a little bit of soul searching. From there, ask tough questions, do a little bit of homework, see, what's out there, and then really kind of figure out your path. Do you want a full service advisor, right? Or are you prepared to do it yourself? And then from there, that's when you can sort of follow that path, get the help that you need, find your allies and support along the way, and then really understand that there is no such thing as a perfectly sustainable portfolio. That really what you want to do is start taking steps in the right direction, right? And then over time, get to the point where you do have something that you're completely comfortable with from both a financial perspective and an ethical perspective.
And I would just say that, all the same principles apply to kind of regular investment versus responsible investment. So the emotions that play, all the pitfalls that happen, all the things you should be doing, like rebalancing, realizing your risk and all that. So I would say it is helpful to bounce something off like somebody like yourself or myself, because all the same principles apply. It's not something really different. There's that RI overlay, but all the other principles apply.
Yeah. And the last point I'll make is that, as you're going through this journey, as Greg said, there are a number of amazing resources. One thing that I find I'm really using a lot, especially looking at mutual funds or these exchange traded funds, is Morningstar. So morningstar.ca. That they recently purchased a 40% stake in a company called Sustainalytics, which does all this ESG data. So it's kind of cool. I can look up a mutual fund or an exchange traded fund in Morningstar, and then I can click on the little portfolio tab and scroll down, and I'm going to get the ESG risk score, which tells me, how risky or how non-risky it is. And then I also get the carbon risk score and fossil fuel involvement. So to me, the fact that I can now get that for free online is an incredible resource, because I think, again, it always sort of starts with, well, where's your money invested right now? And a little bit of an eye-opener when people see that carbon risk score for their traditional mutual fund. And then as you're evaluating the different options, being able to understand sort of where on the spectrum these funds are, that, are they more on the ESG side? Are they more on the exclusion, the fossil fuel free side? I find that resource is very, very helpful.
It's funny, Sustainalytics is Michael Jancy's firm. 20 some years ago, I bought the program that, I forget what it was called, but it would screen the individual stocks, and it cost, I think, $3,000 or $4,000 or $5,000 for a person to have that. Now, it's available for free.
Yeah.
It's probably a lot more for institutions to buy that, I'm sure. Right now.
Yeah, it is. I've been shopping around for the more detailed and definitely there. But what's great is that, I can get that for free. On the individual companies, you can get that ESG risk score through Yahoo Finance. So there's now a sustainability little tab there. And then also there's another firm called MSCI, Morgan Stanley Capital Indices, and they provide that ESG score as well for free. So you can look up MSCI ESG ratings. And, it's not going to be every company. It's still going to be the larger ones and, more of a focus on sort of developed countries. But, for probably about 80% of the companies that I'm looking at, it's really cool that I can at least get those high level scores for free.
And I think one thing that Tim mentioned around that spectrum around, full service advisors and then, do it yourself, there's this new area in the middle, which I think looking at someone like Eleanor who, says, I need to admit this is kind of way over my head, having trouble getting understanding. There's a new niche of financial planners, fee-based planners who will provide advice for a fee to help you craft your own, your actual own portfolio. And so if you want to have your own destiny and do it yourself, but also if you're just a bit initially lost and want somebody who is smart and knowledgeable to help you, there are these, fee-based financial planners who will, for, $500 or $200 or $1,000 or whatever it is based on your income and level, will walk you through and actually help you build a responsible investment portfolio, which is allowing individuals who are a bit lost to at least get that somebody to walk you through to say, hey, here, take an hour me through this, ask those right questions and help me build a plan, which then you then take yourself and then figure out how do you want to invest? Is it Questrade? Is it whatever platform you want to actually do the investing? But at least you have a bit of a roadmap and a bit of a, oh my gosh, what am I even doing here?
Tim would probably agree that financial planning isn't a one-time thing. It's like an ongoing thing.
Totally.
So things change in your life and what have you. So yeah, I would say, having a relationship with somebody that is providing you advice, things change in your life. You have a child, you sell a business, whatever that is, making sure that all those,
Because there's paralysis. Like you just look at your idea of like, so I've got this, all these old mutual funds that I've had for a while, and now you think, all right, well, I know I need to liquidate them all and then spend all that into all this new stuff. And that to me, like having done it myself, I'm sitting on that decision right now because RSP season is ending and I need to make my allocations, and I am totally in a bit of that I need to push myself. Having somebody there that I can talk to or go to, or having a relationship with a financial advisor or a fee-based planner to help me is definitely a great way to push those people who need that push.
You look at the entire wealth planning, the investments, and then RI investments are one little tiny piece. There's tax planning, estate planning, long-term care, risk management, all these different things that you have to deal with on an ongoing basis. But that RI is one important piece, the engine that drives along.
Yeah, and like Eleanor, let me just like speak to you directly for a moment. And really, for me, what it comes down to is if this is sort of over your head, and that's totally normal. Like I deal a lot with environmentalists and social justice activists who know nothing about economics and investments. That like really, that is the most common thing. We never learn about this in school. So really know that where you're starting from, that you're probably a little bit at the start of your journey here. And I see your point that I having trouble trusting someone who's making money off this. Now, obviously, we need to make a living. So this is what I do. If I'm helping you and providing help, then I need to get paid. There's value there. But that said, it really is about finding someone that you can trust and to be able to help you through this and walk you through this, and someone that is in line with your values. So really, what I would say is, use this Responsible Investment Association website to be able to find the full service advisors that are in your area. And certainly, I think we can deal with people who are across the country. So, feel free to contact us. In my case, I offer everyone a free consultation just to see if my services are a good fit. I think it is pretty standard practice that, we'll sit down with you. We won't charge you a penny just to see if it's the right fit, and really find someone that you can trust. And then from there, what I would say is start to build out that education and feel comfortable asking questions. I'll often start with what's the difference between stocks and bonds. Right? That's a very, very good place to start. And then from there, it does get more complex, and it's really going to be up to you to decide sort of how far down that rabbit hole you want to go. And a lot of clients, I think, just are happy to sort of hands off and, hire someone to deal with that. That said, I tend to get clients who are a little more sort of willing to go down that rabbit hole and want a little bit more support there. And then really it's about figuring out, creating this relationship where you understand someone's fee structure, that they need to get paid, how much are they getting paid, how are they getting paid, find something that is comfortable with you, and also finding someone that does have that values alignment, that's going to listen to you when you want to say, that there are certain companies that you want to avoid or certain issues that you want to support. Having someone that's not going to dismiss you, but is instead going to hear you out and say, okay, I hear you. Here are some options.
Awesome.
Great. Eleanor, that was Tim Nash, by the way, from Good Investing.
Excellent. So maybe we could talk a little bit more about some other resources that the audience can access to explore green investing a little further. And again, we're gonna take notes on all this, and we'll send you guys the different resources like websites and stuff like that. But if you guys want to talk a little bit more about other resources they can access to learn more and take the next steps when it comes to green investing.
I think we've covered a lot of good ones so far, right? RIA Canada website's pretty great.
And I'd say if your advisor wants to get more information, the RIA website's good, but also maybe the wholesaler of NEI, maybe a resource as well, or other investment firms that focus on that, like the Van City and portfolios.
Yeah, I mean, it's tricky. Like there really aren't, for people trying to navigate this, there aren't a lot of resources. I created my blog, sustainableeconomist.com, back in probably 2012, just because I was having a horrible time finding a lot of this information. So unfortunately, I haven't updated it as much as I should. Hopefully a big update will come later this year, but really looking to actually make that into a bit more of a directory of these options. But I would say probably the best resources, certainly my blog, sustainableeconomist.com. I would say Corporate Knights magazine. The Corporate Knights does a lot of writing about these issues. I'm a contributor for them. And that I wish there were more resources available. I really do.
For impact investing, which I've always found helpful, is Open Impact. which is still active. It's essentially a directory, openimpact.ca, I'm pretty sure. We'll list it in the email, but it's a directory of impact investments. So they are the community bonds, the green bonds, the types of that pie that Tim was talking about that would go towards direct impact investments, be it social impacts or environmental impact type investments. That's one that I use definitely heavily to do some research to figure out the 2 or 3 types of investments that I currently hold in that kind of slice versus, the other slices that I have, EFT slice, which, I used a couple of resources in people's blogs, often financial planners' blogs and people who have written about their journey and their decisions as to why they made choices. I probably found 5 to 10 now really good kind of pieces of people saying, hey, I invested in this, and this is the reason why. And to your point, Eleanor, you need to be able to trust somebody, and that's kind of why reading 4 or 5 and seeing the same ETFs come up over and over again, really trigger several, seemingly smart, respected people are all purchasing and putting their own money into these things, and they have no financial gain to be investing in these ETFs and mutual funds and these individual products. That to me was a huge part of my journey for me to find out what exact products do I want to make my pie mix. Be it Brookfield Renewables on the TSX, which I invested in because I wanted to invest in their suite of renewable projects that had generated good returns and on the public exchange and dividends, and so that checked off a bunch of boxes for me personally in one of my kind of slices, and that was the type of path that I took to now invest in 8 or 9 different things over the course of the last 2 years.
And I just caution you that an investment may be a really good investment, but it might not be right for you.
Totally.
So that's what you're going to be careful about that. I was going to say the RIA have a annual conference. I've been to a few of them. Amazing resource if you have a chance to go to one of those. Like as an advisor, it's fantastic. And a lot of people on the institutional side and the retail side get together, and fantastic conference.
Awesome. So we had a question from Austin. Could you guys provide some more examples of ETFs which are void of fossil fuel-based companies?
Sure. In terms of the fossil fuel-free ETFs on the market right now, there really only are a couple. And I'm kind of focusing more on Canadian dollar ETFs, exchange traded funds. If you're open to investing in the US, in US dollars, which, as Canadians, we can invest in the US, there are a bunch more options, and those tend to be sort of smaller steps in the right direction. But here in Canada, if we're looking at the Canadian fossil fuel free landscape, there are really 2 ETFs on the market right now